If the market is down, should you shift your equity fund to balanced fund, or should you shift your equity fund to bond fund? That's what we're gonna talk about in this video. So if you want to know more, if you want to shift your mutual funds, check this video out. Hi everyone, this is Marvin German. I make daily videos on the market, on stock investing, on stock trading. So if you're new to this channel, please subscribe and smash that bell so you get updated every time I come up with new content about investing, about trading. And this time, talking about mutual funds, UITFs. Should you transfer your funds? So if you want to know more about that, like, subscribe, and stay till the end of the video. So hey guys, so I know I got a lot of questions from all of you, especially for those who are long-term investors in mutual funds and UITF. So if you're a stock market trader and investor, or you're stock picking, you're buying individual stocks, or you are a dividend investor and you've been following me, this video is not for you. This video will be for people who are primarily invested in managed funds, balanced funds, equity index funds, those who have VULs, those who have UITFs, those who have mutual funds. So these are for those type of people, and you have to get the context of everything. No, please remember, context is still everything. What I mean by context is everything. You have to understand, those who are invested in mutual funds, those who are invested in UITFs, are people who don't have the time to individually nitpick, check valuations, check if this stock is good, this stock is bad, if this stock has this dividend yield. They don't have the time for that. These are for people who just want to have exposure in the market, but just want to put their money in and let fund managers take it for them. And now the biggest question is this. Please remember, as of this point in time, as of this video recording, we've seen the market drop from 9,000 from January 2018 to around 6,700. So the market has dropped massively. Now the biggest question that people would ask is, should I transfer, should I shift, given that the market, given stocks are bearish? Is it more prudent to transfer my money into bond funds or into balanced funds? So here's my answer to that. If you bought at a very, very high price, especially if it's pure equity funds, regardless if it's equity funds or equity / index funds, if you're transferring it, that means you would be redeeming it at a very, very low price. That means you would have suffered a loss as well. My suggestion to that is this: do not transfer it to bond funds, do not transfer it to balanced funds anymore, but stay the course. Please remember, the reason why you are doing UITFs, the reason why you are doing mutual funds is you are doing it for the long term. Meaning, you believe that if it's an index fund, any drops are normal and part of the game. Volatilities like that are part of the game, that it won't always go up every year. But because you are putting it in an index fund, you are putting it in an equity fund over a stretched period of time, it's supposed to perform, it's supposed to do better, it's supposed to do well. So that being said, my suggestion is to hold, stay the course. But if you have extra cash, this is the best time for you to add. This is the best time for you to come in. Why am I saying this? I've said this over and over, especially if it's an index fund. It's normal for stocks, it's normal for indices to go down, but they always go back higher than where they were before. Since you are in the market for the long term, I highly suggest that if you are into index funds, your time horizon should be more than 10 years as well. You should be double downing right now. You should be putting in more right now, because over the next 10 years, over the next 15 years, for sure, from where we are today, the index will always go back up. The index will always rebound. From a PE ratio standpoint, it's a measure of how people see if the market is cheap or expensive. We are relatively 14x, meaning historically this is a very, 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 very cheap place for the PSEI as a whole. So should the market slide lower, where we dropped is already much, much bigger, I think, than where we could possibly still go down. But here's the thing, no one has a crystal ball kasi on how the market will go. No one has a crystal ball on how low the market will be. We do not know how low it will go, but my suggestion already is, instead of shifting into balanced funds, instead of shifting into bond funds, just stay the course, hold your position, don't be scared. Trust that if it's an index fund, it will always go back up. But this is the time for you to find extra sources of cash, get that cash and put it in. That's why I've been saying this all along. I have a fund where when markets correct or when there's a recession, I have a just in case of recession fund where I take the money there, use the money there, and find the cheapest stock that I can put it in and invest. But for you guys, the way that you can do it is continue your course. By the way, if you're doing peso cost averaging, just take the course, put in that specific amount that you normally put in. So if you're putting in 10,000 a month because the market is down today, just put in 10,000. Your plan should not change, your narrative should not change just because the market is down. But if you have extra funds, now is the time to put in more. So if you have commissions, you have bonuses, you have, for people who have summer bonuses also that are coming in, now is the time for you to position already. Just think about it. If you buy when the index is at 6,700 just for it to come back to 9,000, your upside becomes relatively bigger as well. This is the best time for you to average down. Please remember, when I say that it's not good to average down, these are for traders. These are for people who want to trade the market. These are for people who are okay to cut losses when things are not going their way. But if you are a long-term investor and you are investing in funds, the most logical thing for you to do is just to stay in the market, especially if your time horizon is very, very long. And especially, I know the people who are watching my channel, you're normally around 25 to 45 years old. Since you're 25 to 45 years old, at the very least, you can still have 15 to 20 years in the market. So that's the thing. Double down, top up, put as much as you can. And please remember this, I'll say this quote over and over because it's really true. If you're a long-term investor, the best time to invest is when there's blood in the streets. The best time to invest is when everyone else is scared. Again, we do not know how low the market will go. No one has a crystal ball to know that at this point in time the market will suddenly start to reverse already. No one knows that. But here's one thing that I know also. The Philippine long-term economic growth story is still intact. The Philippine long-term economic fundamentals are still there. We're still predominantly driven by the BPO sector. We're still predominantly driven by remittances. We're still predominantly driven by consumption. Of course, the COVID issue can dampen that for the short term. The Taal issue can dampen that for the short term. But we're talking about long-term economics. The remittances will still be very, very strong. The BPO industry will be very, very strong still. POGOs over the long term as of this point in time still gives us a large amount of rental revenue as well. So that's something that's still very, very positive for all of us. But please remember this as well. This year, 2020, construction up until 2022 will be in massive swing still. And there's still a lot of projects from airports to railroads to MRTs to subways to bridges that will go way beyond 2025. So as long as infrastructure and construction will be in full swing, I really am confident that the long-term economic growth of the Philippines is still there. So as long as the long-term economic growth of the Philippines is still pretty much intact, that's one of the things that will cause you still to invest. That's one of the things that will give you the confidence to come in when everyone is still relatively scared. So please remember, since I mentioned consumption is pretty much in the mix, as long as people go to pure gold, as long as people still spend, all of those listed companies that are part of the Philippine Stock Exchange will make money. Pure Gold is part of it. Robinson's Retail is part of it. Jollibee is still part of it. Jollibee, as of this point in time, is at 170 plus pesos per share. There's a lot of fear in it as well because there's a lot of hesitation with the smash burger deal. But from where it was before to where it could possibly be, it's relatively cheap already. It's not at the cheapest yet, PE ratio wise, but if you've bought it at a relatively higher price, and Jollibee is a very, very small portion, by the way, of the index. Now, there's other stocks that are heavily weighed like BDO, SM Prime, SM, AC, Ali, but Jollibee is a very, very small amount. But what I'm saying is this: Ali has dropped massively, AC has dropped massively, BDO has dropped, but not yet super massive. SM, SMPH, they're still relatively in their higher points, but they've dropped also a bit. But what I'm saying is this: all of those companies that I mentioned are fundamentally sound. All of those companies that I mentioned will outlast whatever we're experiencing now for COVID, whatever we've experienced from the Taal volcano explosion. Those companies will outlast it. Those companies know how to weather storms. Those companies will still thrive. Those companies will still be better 5, 10, 15, 20 years from now. By the time I make this video, I still believe SM 10 years from now will still be there. I still believe Ayala 10 years from now will still be there. I still believe Jollibee will still be long, strong, and standing 10 years from now. So drops like this shouldn't cause you to be scared, but should be an area for you to double down, add some more, and confidently invest, confidently put as much as you can. And especially this, if you have extra money that you don't plan to touch, that's what you're supposed to put. Instead of spending it, plant it right now, sow it right now. Like what I've been saying in all of my videos, you have to remember this, that number one, when you plant, it doesn't make money quickly. When you plant, it takes time for it to grow. Like a seed planted in the ground, the ones that have the largest fruits are the ones that need time to seep in, the roots that need to seep in first before the tree starts to get bigger. So take this time when everyone's scared, take this time. If you are an owner of mutual funds and UITFs and equities, don't shift it, don't transfer it into bonds, but double down, put in as much as you can. This is you buying things at a discount already, because the long-term economic value of the Philippines is still pretty much intact. But here's the thing, should it change? I'll be the first to update you that the long-term economic value of the Philippines has changed. But as of this point in time, long-term, there's nothing to be scared about. Long-term, the long-term prospects of the Philippines is still there as well. So I guess that's it. Comment below if you guys have questions off of this, and I'll make another set of videos based on that as well. And if you guys want to learn more about this, what is Marvin talking about the economics of the country? What's he talking about valuations, about all of these things? What's he talking about? What does this mean? I have different courses, live classroom courses in different parts of the world. They're all in the description below. But what I want to invite you on is this March in Manila, this April in London, this May in Singapore and Doha, Qatar, this June in Auckland, New Zealand, this July in Sydney, Australia, and this November in Tokyo, Japan, and Dubai, UAE. All of them are in the description below and in the graphics here. I hope you guys join that. But for those who cannot join and are far from those cities, I have online courses with Chinkitan, Tagalog basic sessions on how you can invest in the stock market. And I also have business, entrepreneurship, and investing sessions with Sean C. We're gonna teach you the basics of how you can invest, how you can do business, and how you can make your money work hard for you. It's called Make Money, Grow Money. The details of that are in the description below. And lastly, if you want to consume, want to learn via books that I've written, they're all available via Shopee. They're also in the link below. We have the basics of the market, we have fundamental analysis, and we have technical analysis for you guys as well. So I guess that's it. One thing that I want to leave with you is this. That's why I've been hammering it all the time, that you don't have to put you can put a large amount of money in the markets, but you only put an amount of money that when volatilities like this happen, you won't be scared. When volatilities like this happen, you won't be emotional, because at the end of the day, what will cause you to win in the markets is that you follow your plan and you're just investing an amount of money that you can tolerate to lose. Always put an amount of money that if it goes to zero, you're okay, that you can sleep well at night as well. That's what will give you the confidence to weather volatilities like this. And because that's all I want here. I want you guys to win. I want you guys to be financially free, and I really believe investing, albeit there's volatility, even though there's movement downward, it will still give you the narrative that regardless of what happens, it's still better than you spending your money on stuff that you don't need. So invest heavily, invest massively. And I guess that's it for now. This is Marvin Germo from Bonifacio Global City. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.